Hello and welcome to GCV Analytics webinar. My name is Kaloyan Andonov and I'm delighted to be hosting today's webinar in which we'll talk about the IT sector. And we've entitled today's session IT sector from AI and big data through semiconductors to cloud and virtual reality. Apart from the ongoing digitization of virtually every sector that the listed technologies in the title suggest, it's not hard to see how essential technology is today. When we think about the COVID-19 calamity that has befallen us all, it's easy to see how essential it is, and how things like remote working that are enabled by the ubiquitous internet connected devices may not have been entirely feasible just about two decades ago or so. Luckily for the world of technology, 2 decades ago is already ancient history. And thus it is no surprise that people see so much potential in this space. The Nasdaq Composite Index has recently not only recovered from the harsh blow in March, but also surpassed the 10,000 points barrier. So I am really excited to be hosting today's webinar and today's panel, in which we will be talking about the technology sector, not in the public markets, but in the private markets and in the venture capital markets in particular. And I'm truly delighted to welcome our panelists. Along with me here, I have Francis Ho, Senior Vice President and co-head of the Samsung Catalyst Fund, Anil Achyuta, Investment Director of TDK Ventures, and Alfredo Ramos Plasencia, Managing Director at CPI Enterprises. So welcome, gentlemen. Really pleasure to have you all here on the webinar.
Thank you very much.
Thanks, Kaloyan.
All righty. Before we move on to the discussion, I really like to take a few minutes and give a brief overview of some of the data that we've gathered on corporate venturing activity in general and on the IT sector. So starting with the data on H1, if we look at it on a quarterly basis, it's going to be hardly a surprise to anyone that Q2 did rather poorly in comparison with the same period from last year, and there was a significant drop in the number, both in the number of deals and in the total estimated dollars that we've tracked in those deals. And indeed, if we look at it on a monthly basis, there's clearly from March onward, there's clearly a trend in which there are fewer deals this year than at the same time last year. But what was really surprising is that despite that shock, that exogenous shock, which was inflicted not only on the investment world and on the venture capital world, the proportion of deals in terms of their size, whether it's big, medium-sized, or small deals, has remained relatively stable throughout the past 2 quarters, and vis-a-vis previous quarters from at least from the previous year, 2019. The number has remained more or less stable, which does give us a bit of a reason to be optimistic. Now, if I move on to the IT sector, as I mentioned in the beginning, digitization is something that's going on in virtually every sector in the economy of today's world, and this is inextricably linked to datafication, with 2.5 quintillion bytes of data being generated virtually every day. And it's no surprise that the big data analytics market, which is currently estimated at about 37 billion, is forecast to nearly triple within the next decade. Big data, however, is unthinkable without it, or its handling rather is unthinkable without technologies like artificial intelligence and um, and machine learning. However, artificial intelligence is in a sense controversial, because while most executives tend to see more opportunities than risks in it, there is a social side to artificial intelligence and the potential creative destruction it might unleash. And while some consultancies like PwC have estimated that the potential contribution of AI to the global economy in the next decade may amount to over 15 trillion, nearly $16 trillion. Its impact on jobs is very much uncertain. However, with the COVID-19 pandemic, we may have just gotten a glimpse of what may be a more peaceful transition of the labor force to an AI-powered future. And here I actually pulled this quote from a recent report by Deloitte, which says that the health crisis gave people a greater appreciation for the fact that humans and technology are more powerful together than either can be on their own. Consider how telemedicine, manufacturing, education, and even grocery delivery drew on the power of integrated human-machine teams during the crisis. And this is indeed a novel sort of position, a novel sort of opinion that I've read on the matter, which could not have been found before the crisis. Indeed, so I thought I'd share that with the audience during the webinar. Now, digitization comes along with a considerable degree of risks, and when it comes to digital risks, it's the cybersecurity space that's in charge of taking care of those. And that space is expected to grow substantially within the next 5 or 6 years, as according to the Forbes forecast here. And most of it will be most of the spending will be for externally managed security services. And this is, I guess, hardly surprising, as we've seen the rise of remote working, which has let our world function more or less normally during this pandemic. Cloud tech, with most companies already using multi-cloud strategy, this is something that is definitely here to stay. Other interesting technologies like VR and AR are very interesting, but it's not quite clear whether there's going to be a possible divergence or convergence between them, because they do have different fundamentals. So I hope some of the panelists today may help us find out some more on that. The market for it is estimated to reach beyond 30 billion in the next decade. So it's definitely an interesting market. And digitization, of course, would not be possible without computing power. And it's semiconductors and chips, broadly speaking, that enable the computing power of the world. So in 2019, we did see a big decline in revenues for that industry. And that was largely attributable to trade tensions between the US and China. This year, we're expecting to see a decline as well, mostly attributable to the pandemic impact. However, probably not as big as last year's, according to most forecasts I've been able to read. And it's important to remember that for the semiconductors, the major longer-term drivers are obviously the IoT, the digitization of all sectors, 5G, and all the other technologies it will enable and unleash, as well as cognitive tech. So in that sense, it's also important to mention that we've seen the rise of edge computing. And the edge computing market is also estimated to to surpass 43 billion by 2027, at a rather impressive compounded annual growth rate, according to some forecasts. Now, onto the data itself. We did see investments of IT corporates increase in number of deals on a year-on-year basis, as you can see here from 2018 to 2019. There was, however, a bit of a drop in terms of the total dollars registered in those deals. There was also a bit of a drop in terms of the exits for such investors that we've reported of about 10%, as you can see in number, but in the dollars it was slightly more drastic than that. However, on a more optimistic note, the number of corporate-backed funding initiatives that may benefit IT companies did see a slight increase in their numbers, and a significant increase in the total estimated dollars in such initiatives. We're yet to see how that is going to look like by the end of this year, of course. Now, before we move on to the discussion, of just a few words about us as an organization. So Global Corporate Venturing is our main publication, looking at how corporations invest in startups, either directly by taking minority stakes or indirectly through LP commitments in VC funds, as well as how corporates interact with the broader entrepreneurial ecosystem. Its sister publication, Global University Venturing, deals with innovation stemming from academia and subsequent rounds that university spinouts may be able to raise. We have a third publication kind of in the works called Global Impact Venturing, which basically revolves around how environmental and governance concerns sort of translate into an investment portfolio thesis or mandate, in a sense. Aside from that, of course, we have the GCV Analytics Tool, which is our visualization tool, taking all the data from our publications and trying to deliver visual insights. We have run the GCV Academy, which is a two-day course on how to go about setting up a venturing unit. It's led by Paul Morris, who is a CDC veteran and who was for many years the managing director of Dow Chemicals CDC unit. Now, the planned sessions for this year were obviously put on hold because of the pandemic. We are hoping to be able to give you more information fairly soon on how we are going to continue to do that online in the meantime. And all of these are under the umbrella of the Leadership Society, which tries to bring together all the global leaders of corporate venture capital, and to foster a sense of a community. And indeed, the members of that community have been coming to our events, which we organize pretty much across the globe. Now, the live events are obviously on hold because of the pandemic, and we are hoping we will be able to resume them soon as we can. However, we have started our GCV digital forum, which we ran its first iteration in the beginning of June, had a very good turnout, very positive feedback from participants. So we decided to run another iteration of it on September 29th, and it's going to be all online, all worldwide, of course. So for an early bird, you could register by July 31st. So make sure you sign up and get connected with your peers. With that, I kind of conclude all the stuff that I have to say. So let's start the discussion panel. Perhaps I could stop sharing the screen now and see if we could make it feel more like a regular Zoom call for us and for the audience. So Before we start the discussion, let me just remind the audience that they could submit their questions either in the chat or in the Q&A section while the discussion is going on. We will try to spare a few minutes towards the end of the call to answer those questions. So please feel free. And now let's start with the much wanted discussion. So guys, I guess if you could just take half a minute or so to briefly introduce yourselves and your organization before I start shooting the questions. Anil, perhaps?
Sure. Thanks, guys, for inviting us for this event. And my name is Anil Achyuta. I'm an investment director at TDK Ventures. We are a $50 million 5-0 fund from corporate, backed by corporate TDK, which is a Japanese electronics company. And we've been active for just over a year. And we're a recent fund. Our main focus areas are in investing in mobility, in Industry 4.0, which includes robotics, IoT, etc., health and wellness, and energy. And I'm really thrilled to be a part of this panel. Thank you so much.
Thank you. Likewise, pleasure to have you, Anil, always. And now let's go with Francis.
Thank you, Kaloyan, and very happy to be here. Excited to have the chance to learn from the other panelists and the other industry colleagues. So I'm a managing director and co-head of Samsung Catalyst Fund. It is a global team which operates out of Silicon Valley. That's where I'm based. We're in New York City, Israel, in Berlin, in Paris, and in Korea. Our investment approach is basically the areas that touch upon the future and the present for Samsung. So broadly speaking, we think of ourselves as a sort of barbell approach, which is we invest in the core technologies because Samsung is strong in semiconductors, in infrastructure technologies like storage and compute and so on. And then we invest in the cloud, which is a core infrastructure also to make everything possible. And then we invest in the end services. So we kind of don't focus as much in the middle, which is the enterprise, you might say B2B kind of software, but we go to the end services which are enabled by mobile and cloud. For example, fintech, mobility as a service, healthcare, new kind of life sciences technologies, because we believe that on the one hand, Samsung, because we touch many consumers, there's something we can bring to that. On the other hand, by understanding where the future is going as driven by the business end users, we know then what to focus on the core tech. So that's our focus. Thanks.
All right, thank you. And Alfredo?
Well, thanks, Kaloyan. Hi, everyone. Very good to meet you. Alfredo Ramos, I'm the managing director of CPI Enterprises. We're actually probably the smallest group here, next to such multinationals as TDK and Samsung. We're fairly new to the picture. Perhaps we're saying CPI is a research and technology center based out of the northeast of the UK, or northeast of England, better said. Basically our focus, we invest from our own balance sheet. We're relatively new to the market, so to say, very focused on two key areas around, I think it's a cleaner environment, so sustainability is a big point for us, and also healthcare. Probably we come in at a much earlier stage than probably my colleagues here, Anil and Francis would do. So we very much focus on seed and up to Series A stage.
Thank you. And okay, so let me just kick in and start with the first question that's probably on everyone's mind. How has your investment unit been doing during the pandemic and the ensuing lockdown? So I guess we'll start with Alfredo.
Good. So with respect to how we've been doing, as I mentioned, it's early days for us, right? We've been in this current form together for about a year. We've recruited a new team. A very young, I would say, and motivated team in that sense. So, from our side, the team has been quite technology savvy from the start, and we've had all the tools that you would expect for remote working, video conferencing, etc. So actually, for us, has been more or less a seamless transition, to be honest, than anything. Of course, there's been impacts about not being able to meet with the team and also meet with those companies that we want to work with and we're looking at. That has been a challenge. But I'd say, for us, there hasn't been much of a change in this world, right? If you think about us coming together recently and establishing our ways of working, I think there hasn't been much of a change. So far, as I said, because we're quite young, we've only made 4 investments so far with a realized value or return of about 3 times of the cash invested. And I would say that I would even consider those investments more legacy, or things that were already in motion before we've assembled the whole team. So perhaps we haven't faced the day-to-day difficulty of making those final investment decisions without actually physically seeing the team. And from our contacts of investors, in Israel, in London, and in Switzerland, what we see is that that's something that people start to worry about. Plenty of the deals that were closed earlier in the year were things that were already in the pipeline, whereas obviously now you have to source new deals, and how you're going to close that without physically meeting people. It just means doing things differently, but I suppose that might pose a barrier.
Anil, I know TDK Ventures is also a relatively new on the playground, so to speak. So perhaps you could share how you guys have been doing and handling this huge and unexpected challenge in a sense.
Yeah, it's strange. Just on a lighthearted note, I moved from Boston to Silicon Valley about by December 2019, and I haven't been at work. I've just been working from home, having moved all the way.
Lucky you, huh?
Just on the lighter side aside, I know it's been a really tough time for a lot of people. We're very blessed to have a job where we can actually do work remotely and add value and be impactful globally. We're very thankful for that. From a fund perspective, since we're sort of structured as a separate entity and we have dry powder to make investments, we've been actually hyperactive, let's say, during the pandemic, and as we speak, we're closing 3 deals this week.
Wow.
Yes, and we have been actually doubling down our efforts, and we've had very good success in terms of getting high quality companies in our deal flow, as well as being able to move forward and actually make the right bets and continue with diligence. And from a portfolio company point of view, I think it's nobody is unaffected or immune, literally or metaphorically, to COVID-19, right? So we're all affected by it. There are a couple of companies that are benefiting from it, especially the one here, Starship, the food delivery robot company. And people don't want to touch things, so they're getting a lot more traction than before, because they were focusing mostly on campus delivery, and now they're getting a lot more traction on maybe even in mainstream public sources. So some companies are doing really well. Some companies are definitely affected by it, and we're trying our best to help them through it. Think about how to cut costs and how to run the company in a lean fashion, how to tap into new opportunities, and how to pivot and so on.
I see. How about Samsung?
Right. So I echo most of the things that the panelists have talked about. I think it's interesting because we have a global team, we got to see how everybody was affected by their local situation. So one extreme is the New York City office. They left the city. They went to wherever their families were located. In some cases, to the Midwest, right? Another case to Connecticut, and they were sheltering from home since that time. The other extreme is Korea. Korea, Samsung, and Korea, the country never really shut down at all. Kept going into the office every single day, never stopped. Just wear mask, social distance with discipline. And in the middle is like Germany, right? Berlin office. They were shut down, but they went back fairly quickly. Israel, was shut down, but society kind of resumed a little bit, then another wave. So we saw the kind of nuances across the globe. It's really just we're subject to the local conditions. I think Anil, what you're saying, we feel very fortunate, all of us, I guess, here, that our work is the type that can be absolutely virtual. So we're kind of surprised by how efficient and effective we've been able to do our work. Deal flow is still very strong. We just have a different criteria, as we'll talk about later. We actually have continued to invest. We announced, for example, Solaris Bank a few weeks ago, which is a new kind of banking as a service platform in Berlin, and have been fortunate to have 2 exits in the last few months. Sold Mapillary to Facebook and Datrium to VMware. So it's definitely not normal in the sense that also that the portfolio companies, the ones that are about to kind of overcome a tough situation before the COVID hit, this hit right in the middle of that. So if they had to, hire, they had to release the product, had to raise funding, very difficult for them. So that takes a lot of our focus. And of course, just thinking about how to change our strategy going forward, because the world is clearly a different place.
Clearly. And with the world being a different place, it kind of dovetails nicely onto my next question is, what trends and technologies have you been observing in the areas you invest in most heavily over the past year, before and after the pandemic? So perhaps if we could start with Alfredo again.
Yeah, I mean, perhaps worth saying here, obviously the panel today is about IT and data in that sense, but we wouldn't be investing in things that fall into that niche only. So for us, it's more about application of technology as a whole across different sectors. I'd say what we've seen for quite some time, that's across markets and geographies. I think it's technologies that help increase either productivity or scalability of businesses. That could be, if you think about more the manufacturing end, that could be things around process automation, application of AI, machine learning to things like asset and performance management, integration across the enterprise, and being able to bring information, both from consumer up to the manufacturing side. I think it's something that we have seen quite actively. Again, as well, development of new sensors, new concept. Of course, we're all used to application of AI and let's say we talk about big data, the things that are more related to the internet, marketing applications, etc., where there's huge amounts of data being created continuously. If you think some of the areas where we focus on is more on the manufacturing end, to give you an example, out of a bioprocess, something is very current right now. I think about COVID-19 vaccines, for example. Those that will be manufactured with a mammalian cell culture, for example. The amount of data that comes out of such processes is actually fairly small. These processes last for 2 weeks on average, let's say, and you may have maximum a gig of data out of it. That's not big data. That's not much. So actually, in that, could give other examples across other sectors. But I believe that sensing technology is coming up as well. Particularly not in the form of more static or high precision measurements, but how can I include low cost, variable form factor sensors that provide information about my manufacturing operations or products across the entire supply chain. I think this can engage with the consumer as well. So it's something I've been seeing quite actively. Another point is diagnostics, and I think that will be strengthened. Ties into some of the further discussion, but diagnostics, moving away from secondary point of care, hospitals, etc. We've seen that, for example, patients with diabetes affected in an over proportional way by COVID-19. So any treatment or diagnostics that need to be done has to be away from hospitals. And for healthcare in general, I think this has awakened us to the fact that it is not only climate change, although that is also becoming very important, there's other dangers to society as a whole. And I think just looking at preventative care, treatments, reducing those secondary care requirements, being able to empower people more to take ownership of their own health is important. And then finally, obviously, the aspect of sustainability. I think that's an accelerated trend. And there I'm thinking about two areas fundamentally. One is, of course, energy, and everything related with climate change. But linked to that climate change aspect is, I think, is also a huge push for sustainable protein production as well. And protein that is either plant-based or provides some substantial health benefits. And obviously that comes with all sorts of requirements as well for tech, able to monitor crops or monitor, how you're performing your agricultural operations, and understand how you can reduce energy requirements and impact on
precision farming and
indeed. Yeah.
All right. Yeah. So you summarize it nicely how tech really spills over pretty much all across every sector.
Indeed.
There is out there. Anil, you were from TDK, and TDK is in quite a few sectors. So perhaps you could share some of your perspective as well on different types of trends in tech.
Our thesis is to invest in material science companies that are in the forefront of making a digital and energy transformation. That's been our thesis. You can go to our website, you can see that, and it really doesn't change for us, whether there's a pandemic or not, because as an investor, we think long term, and especially as a deep tech investor, we have to think long term, right? Because these things take a long time to develop, and it's just not easy to make these things happen in like an app. So for us, as I mentioned, the four areas have been quite solid: mobility, industry 4.0, health and wellness, and energy. But particularly what we've been seeing a lot more is on the point of care diagnostic space. It seems like there's a little bit of a surge just on the imaging side, because imaging, if you see historical data in med tech, it's really not had great returns compared to other areas. But now we see a lot more, at least on the point of care side, on triaging and making things faster, etc. And of course, AI is going to be a massive accelerator of this, right? Just because imaging and images, I think that's the best use case, at least in healthcare, for images, in whether it's a X-ray or an ultrasound, a point of care ultrasound, something like that is really, really interesting space. Another space I fully echo with Alfredo here is on the sustainability side, right? Because I hear things like, I grew up in India, and many of my friends say, hey, this is the first time actually we're seeing the Himalayas. It's so polluted, and now it's like it's completely, we can actually see these sceneries that are so beautiful. So I think it really we as humans have this sort of bias towards seeing is believing concept, and I think that sustainability is really pronounced the moment you see it. So we're seeing interesting companies as well on the sustainability side, and just supply chain, future of supply chain and things like that. you know, recycling of batteries, you know, really interesting ideas, because, you know, you cannot think of the world as a centralized manufacturing anymore, because the supply chain is just hit everywhere, including TDK. We're affected as a mothership as well, despite our manufacturing power. So I'm very excited to see more on the point of care and the use of AI there, and the future of supply chains. I think that's very interesting on the trend side.
I see. And if you allow me just one question, because I remember on our last summit in California this year, back in January, Nicolas, who is the managing director of TDK Ventures, actually presented a robot on stage, and that was kind of exciting for the audience and for me, because it was made by a company you guys have just invested in. So if you could just comment a bit more on the automation, robotics, and AI side of things as well.
Yeah, I mean, you know, I think it seemed like it was a very small market. You know, we actually talked to a lot of Starship investors who didn't invest in Starship as a part of our due diligence, right? We want to talk to everyone. And we asked them, okay, why didn't you invest in this? And they usually say things like, well, campuses are really small. We don't know how they're going to scale. And there's only so many campuses in the US. The TAM is small, et cetera, right? And suddenly COVID hit, and, you know, Starship is on the cover of New York Times, okay? And suddenly everyone's talking about robotic food delivery, and how Uber Eats compares to Starship, and, you know, suddenly the comparison is just it's a different ballgame altogether. And I think that AI is so important, because now we're talking about traffic, right? If you're in mainstream, you know, going level 4 or more beyond autonomy is much harder rather than campuses. So they really have to up their game on many areas of sensing, right? Being able to go and crosswalk, and they have to hear, so they have to add microphones, and really interesting technological improvements that they have to make that they didn't have to make before, because all they needed was a camera that, you know, went on a really defined path, and, you know, of course that's complicated as well, but now suddenly, you know, there might be opportunities to incorporate, you know, ultrasound sensors that we use for parking, range finding, you know, all these interesting new ideas that really never had to be implemented before. And Starship has really done very well to adapt to the situation. They have, you know, they have a lot of battle to win. They still have a long way to go, but I believe that robotic food delivery, parcel delivery, and various other deliveries where it's no touch with people is certainly going to be a market that is going to be a much bigger one, especially if it's on a terrestrial ground, because there's already bike lanes, there's already infrastructure there, unlike like drones and other areas where the FAA is, you know, still very conservative on approving these new technologies in there. But, you know, the point is that AI is, I would be very surprised if I see a company that doesn't use AI.
You mentioned something very important, Anil, and it is, before probably we've looked at, apart from in science fiction, we've looked at robots in dumb applications, let's say. You know, you need to perform the same application multiple times, let's say in the automotive sector, for example, where it has huge penetration. And then we've seen AI as a separate thing. Then what you've mentioned is a very important trend, which is just that the combination of the two, right? The embodied AI in a robot, in a way, it's going to be key.
So I think that's an example where we kind of separated the hype from reality. So you recall the autonomous driving, and it turned out it was a lot of hype. Huge amounts of money went in, and basically nobody expects to see widespread self-driving cars for kind of long enough. It's like 5 years or more outwards infinite. You don't know, basically it's N plus something. And what happened is, as Anil just said, is that same technology stack is being applied to solve more kind of practical, very well-defined problems, curbside delivery, home delivery, inside the warehouse, and so on. We invested in a company called Bossa Nova, for example, that's about preventing stockouts inside large stores like Walmart. It cruises the aisles using computer vision, using autonomous navigation technology, doesn't hit anybody, and then improves the efficiency tremendously. So very, very narrow use case compared to deciding what to do in fog and rain and some road and so on, right? So that's kind of the autonomous driving scene. If you contrast that with, let's say, digital health, telemedicine, that's an example where decades of work have gone into the digital health. Nothing much is new, actually, if you think about it in terms of the core technology. We've had video and wireless connectivity and things like that, sensors for like decades. But and that's an example where the business is now taking off, because there was an article in the Wall Street Journal this past weekend which said, hey, maybe this is not going to be over anytime soon. We all have to think as companies, what is the future going to look like? Rethink our future. So telemedicine is an example where healthcare organizations are going, oh my God, I have to, maybe the hospital is not the hub in the future. I have to get my act together for virtual care. How do I do that? So we invested in a company called Genome Medical, for example, which is because it's so complicated to use the best science that's available to tell you what test should I get and what does it mean when I have this result for my disease. So they basically apply algorithms and human experts using online services, and it's the right place and the right time. A third example is fintech, which is, again, years and years, I think 5 years ago, EU put out this PSD2, new regulations that free up and open up APIs. It's getting adopted the last few years. And now COVID hits and boom, online purchases, payments become the bottleneck. And so not surprisingly, flourishing of new companies like the one we invested, Solaris Bank. So I think the lesson is that, the hype thing, it does take time to play out. And those that have gone through that and have matured the ecosystem, those are the ones that could take advantage of the current situation.
I see.
Yeah, I want to add one more point to Francis. I fully agree, Francis. Even the hospitals, right? Many of them still haven't jumped onto the cloud. They're still kind of slower to adopt the cloud. Anything on the cloud infrastructure. They want things to be physically placed and then archived, images, whatever we talk about. So I feel that AI is going to be really, and telehealth, based on the situation today, it's going to be an accelerator, and every hospital has to think about, okay, should I change to cloud? It's like the EMR thing, right? Everyone has to have an EMR now. So I think it's all going to be an accelerator in the future.
Mm-hmm.
That's a very good point, Anil, and that's an area where the benefits are clear. Let's say if you think about preventative care, and I'll give you an example of the UK where some people have preventative care plan because of certain conditions. And normally these are delivered by people, but every single individual managing such a preventative care plan would have 500 patients. So if you think about it, having less than a day per year per patient, right? And if we discount, weekends and so on, etc., and the holidays, it comes down to, less than half a day a year that they have for these patients. Actually, to understand, we start monitoring patients more and having more signals, more sensors. We don't know what's going to come out. Let's be very honest about it. But I think it's only through, large-scale processing of data, that's where AI plays a crucial role together with cloud computing, that we're going to start to develop, the knowledge and the business case, not only the business cases, but also the advantages to care that really will drive that adoption of the technology. It's a hugely exciting space. I think we slowly move then into areas like data ownership and things that we're seeing right now, with social media and backlash that Facebook has faced over the last few weeks. If we think about that information as being exchanged right now, it's not that critical. But if we think about medical records, etc., that's where an area, I think one of the barriers to adoption will also be, apart from everyone getting the technology in place, etc. It would also be related to how do we manage the data, how do we keep privacy of it, and how to make sure that it's kept safely.
Yeah, to kind of expand on that point, Alfredo, you mentioned this medical records. What's interesting is that people are figuring out the value of these a critical mass of medical records when you link phenotype with genotype, right? And of course, medical records are they're collected on behalf of the public. They're part of large health systems who have a public mission. So there's this very interesting question about when you have this concentrated repository of data, could be NHS, could be the government of some country, could be the United States. What do you do with that data? Because if you leave it to the bureaucrats, the government, and unfortunately nothing happens. So you have to inject private enterprise into that. But that's very tricky because if they profit, is it against the mission of the organization? Are the physicians happy with that because they have ultimate control in terms of using this data? So what we're seeing is that around the globe, including the UK, the US, Israel, and so on, Asia, Taiwan, whatever, there are innovative new efforts. Kind of the key is public-private partnership, which is like very well thought through way so that you're protecting the privacy, you're giving the private sector a chance to use the data, do something that's going to be profitable, and then there's a way to accrue the benefits back to the same public source of the data. Very tricky, but you're seeing multiple attempts at that. So I feel like that's the future and very promising.
I see. Well, you've kind of answered my sort of next question, which was about which of the trends has the downturn accelerated within tech and within other spaces that are touched by tech in a sense. Are there any other sort of profound technological changes that you expect to see in the post-COVID-19 world, whenever that might occur, and let's hope it does soon? And what would they be? So perhaps if we start with Anil.
Yeah, I think I don't have too much to add other than point of care, telehealth. I think on the sustainability side, I would think there's going to be supply chains, digital supply chains that are going to just massively change. There's future of work. I think there is going to be hugely different, but fintech, as Francis mentioned, just that space is going to really accelerate. But yeah, I don't have too much to add beyond that. Robotics, we talked about people actually going to hospitals versus getting care elsewhere, because half of them are really afraid to go to the ER. Right? No one wants to go to the ER. So yeah, I would think that those are really good points that we discussed. I don't know if you guys have more to add.
Sure. Would anyone?
I want to double.
Yeah,
maybe I can double click on a few ideas. I think Alfredo, you mentioned one of your focus areas is like the biomanufacturing. You talked about mammalian cells and biologics and so on. So we look at that very closely because Samsung has a business in biologics, and we see very clearly that what we call biology and tech converging, and you see it across. Like you might even say digital health is an example of that, but more specifically in biology, everything from. Can you still hear me, by the way?
Yeah. Loud and clear.
Okay, I lost the internet video connection. Okay. On the biology side, everything from drug discovery to development to the manufacturing part, there's tons of companies jumping in, many of them actually coming from the semiconductor sector, because semiconductors went through that transition in the 1980s. And I would argue biology is probably where semiconductor was in the 1960s, actually. It's quite immature yet, but there's this tantalizing possibility, which is you can use tools at some point which is more horizontal, and many verticals can benefit from the same tools like Cadence, Synopsys emerged from semiconductor. And the idea is that you take this very combinatorial, complex, kind of a seat of your pants, intuition driven, like a master drug hunter, as they call, like this chemist who hunts drugs, is like irreplaceable. There's an intuition that can't codify. How do you make that more systematic? So that's one area. On the other extreme, or I guess in the middle, is this clinical trials process, extremely expensive, extremely slow. It is the main bottleneck between here and the vaccine, for example, right? So how do you make that faster? How do you use what's called real-world data, real-world evidence in the data from our medical records to accelerate that? Tons of more workflow, privacy kind of things in that. And then the other extreme is the manufacturing side, which is basically chemical engineering. You have like mixtures, vats of stuff. It's kind of like brewing beer, except it's very high value chemicals coming out of that. And then these are cells. These are often mammalian cells, in some cases yeast and bacteria. They're very finicky. They're like living things. And how do you make them behave and maximize extracting as much as possible, minimize impact on viruses and other kind of pathogens? So how to optimize that equation, super complicated. So lots of ideas about using IT to go there. So that's something we look a lot at also.
Nice.
Yeah, I want to add to that, just practically speaking, Francis, right? I was looking at Moderna's data, and Moderna is doing really well. 45 patients, all of them have shown, response, but now they have to do a 30,000 patient trial, right? How do you even recruit them? How do you, stratify them? How do you, there's so many questions that the digital, clinical trials design and all of that, IT layers will help on, I think is going to be really, really exciting on how these companies think and execute at the same time and innovate on top of it. And I also saw a great article about just the vials. When you think about vaccines, just the vials are glass vials, and turns out that those vials are made of beach sand, and there's like this real shortage of that because you have to get it from a specific place, and there's quality control issues. So there are companies that are innovating on taking plastics and engineering coatings and things like that. So I think just the fundamentals of our society has been questioned today, and I think really, really good companies are going to come out of it, regardless of AI or not. But I think digital transformation is going to be at the center of all of this.
You've raised both really good points, and I think on one thing, Francis, you're absolutely right. I mean, with respect to biopharma, I mean, early in my career, I did research exactly in that space from 2000 2004 in Germany, and I can tell you that process development to date and how we evaluate the information that comes out of experiments, it's pretty much the same as 16 years ago. And even though we have all sorts of evolutions, I mean, I still see people at the end of the day, you collect all sorts of data, more data than you could ever do. But at the end of the day, it ends up with microbiologists or molecular biologists going through Excel spreadsheets, basically by hand, in a way. Whereas actually there's plenty that we could do to present either secondary measurements or inferred measurement that would give lots of more information about the process and accelerate that part. Clinical trials, I think you both mentioned key points in that. I would only add to it the manufacturing side. If you look at, let's say, 10 years ago, before the first patent cliff started to occur, you would have maybe one particular pharmaceutical being developed in the manufacturing process. So that was never the bottleneck. And I think a good example is AstraZeneca. After they fell off their Crestor, so one of their statins out of the patent cliff, they started to realize that actually to drive more sales and replace those revenues from Crestor, they need to have a very, very healthy product pipeline. And that's what they've done. And they also moved towards oncology. But talking to people from that were at that time in AstraZeneca, you could see that, I think, for example, in 2018, they had about 17 products that had to go through the CMC, so the manufacturing bit, whereas that's more than in the previous 4 years. So suddenly you start to have lots of pressure on these individuals, on those chemical engineers trying to develop the process. That's what I believe, Anil, you're spot on. So the digitalization aspects, how to evaluate data, how can you share data across the enterprise, but how can I use that as well to automate, design and automate these processes is going to be key. And just to give an example, for most clinical trials, you see that 50% of the clinical material is being wasted, is not being used. And yes, these are pharmaceuticals that probably cost more than platinum, and that's at a cost. But obviously within the whole of pharma, that's only a blip, right? Cost of goods in pharma is maybe 2 to 7% of the overall cost, so that's not much, and that's why it hasn't carried weight. But what I think the pressure point is right now is that's also resulting in delays in carrying out these clinical trials because the material is not ready. And I think that's something that can be optimized. Finally, one more point, and I think it's something that is, I'll be provocative here, but so far, because of the dynamics in terms of cost, I believe pharmaceuticals has seen manufacturing as a secondary activity. It's a low-cost activity. I would put the example of the retail sector, perhaps in the late 90s, early noughties, and the importance that they give to logistics and distribution. And yet you have someone like Amazon coming in and making that really a value-add activity. And that's what I see is going to happen to pharma. And I might be wrong, but if you ask me about the trend that I would see in the future, is how you manufacture, how you deliver those products to the patient, and how do you tweak and tune and customize these products to the patient is going to be one of the value-add activities that you'll have there. And particularly as well, because if you pair that up with the diagnostic side and you can monitor the impact on those patients, that allows the much needed revamp of the business model, right, of the reimbursement model, and trying to look for something that is more outcomes based rather than just by the number of or volume of drugs that you sell.
Right. Really insightful answers, guys. I see we're approaching the top of the hour, so one more quick question from me, and then there's 2 questions that have been submitted by the people attending live. So the question I really wanted to ask you is, in terms of your ideal investment case for a startup that you look to invest in, how has that been changed during the pandemic, and do you see yourself as more financially or strategically driven now than before? Perhaps with Francis?
Okay, so we actually always viewed the financial and strategic aspects as very intertwined, because we actually started with more strategic, and we quickly learned that it doesn't really help you if the company that's very strategic cannot raise money, they can't attract talent, because talent flows to where they make profit. So we quickly learned that you actually have to balance the two, not because our mission is to make money via investments. Frankly, something so huge that it's very hard to make an impact via returns on the investment. It's more like that's the way to make impact via our investment, because that'll attract the best ideas. So we look for the two together. In this pandemic, what's clear is that more than ever, the great team and great investors, those 2 things, right? Like the great team and maybe a very interesting business plan, but frankly, it's going to change. Nobody knows. We can't predict a week from now, right? So the great team gives you comfort that they can work with you, to listen, they'll hire great people and they'll pivot. And great investors is so important now, as you know, because you'll take a lot of patient capital and sometimes tough choices to make the right investment. So it's like great team, great investors, and then maybe third after that, interesting market that aligns with the future, but nobody knows that.
Alfredo?
Yeah, actually, I'm trying to think out how to add, but I completely agree with Francis here. I mean, if you think about the objectives of the vision for our mothership, right, for CPI, we're really minded of creating that healthier society, a cleaner environment, and a vibrant UK economy. We're quite focused on the UK. But the key thing is, how do you deliver that as a ventures outfit? And we've been discussing that internally. We see this in 3 coordinates, right? One is the financial aspect, one is strategic, and the other one is impact that you're delivering. And I completely agree with Francis. Without the financial, I think that's the necessary condition. You need to generate a return. you might compromise on the level of return, but the financial for us is a given. And then obviously, then depending on whether, we might invest in something that doesn't have the impact story, but it actually pushes us forward strategically in developing certain technologies, for example. And then on the other hand, you might have something that is high impact, but doesn't develop your strategy with respect to technology you want to develop for the future. But I think for us, nothing much has changed. Financials are very important. They're the basic. And then you'll then decide, depending on how much of strategy, how well it fits with the strategy or how much impact you can generate.
Anil, your perspective?
I think both the panelists have been bang on target. Look, TDK turns about 13 billion in annual revenue. If we take our 50 million and return 250 in 5 years, it's not that big of an impact.
Not moving the needle.
But if we invest in companies that don't make money or don't, they lose money, that's no one's winning, right? And we want to be able to work with companies that have that very high financial outcome potential, because we want to make sure that we invest alongside with other good co-investors. If you try to target for lower financial return and high strategic return, basically you're going to cut that into half or 1/4. Basically, what I'm saying is, if you try for a 5x, you're going to hit 1x. So you just have to make sure that you balance the two, along with the sustainability impact, right? That's always in mind. The only thing that has changed for us during COVID-19 is exactly what Francis said. We pay in order to give green on our scorecards for team and co-investors, the bar's just gone one notch higher. So the team we want to invest in has to be absolutely stellar. The co-investors have to be really, really good so that they can support the company when the chips are down, and they can give additional runway so that the company is not constantly fundraising. I mean, as a startup, you're always fundraising, but you want to make sure that there are investors that are backing you. So the team and the co-investors on that bar has gotten just one notch higher.
All right. I'm conscious of time, but I would really like to take at least one of the two questions that were submitted by the audience, if you guys don't mind staying with me a couple more minutes. So the question is, in what ways do you think the rollout of 5G will go on to enable new applications for edge computing? So who would like to start first on that? Perhaps Alfredo? Or
if you want, I think it has vast potential to change, and at risk of just going to platitudes, but I think it's not only more in terms of what you can do, what services you can provide, how you can provide them, but also how you can alter business model. And I take something that doesn't seem much, but think about, for example, and we have, one of the companies that we're incubating is actually looking into this space. Slightly different proposition, but imagine if you could measure directly online the gradation of a tire, right? Imagine you can embed a sensor, that tire manufacturing process, it would constantly send a signal and tell you how much profile you have. Think about what it would do, of course, for the consumer. Yeah, great benefit, etc. That you always will be safe on the road and so on. But think about as well the change in business model that would do for the tire manufacturer. For suddenly you're completely aware of the state of those tires all over the world. You can align your supply chain, you can reduce your working capital in order to be able to provide that tire just in time to that consumer. I think will drive definite fidelity for the users of a particular tire if they're happy how it all works. But think about the benefit as well for R&D activities. If you're collecting data from all across the world, you suddenly can start producing compounds that are optimized for a particular geographical location. And the key thing here is you're gathering data of your product in service, which is something that actually so far mostly only the software industry has been able to do. If you have a log, suddenly that will be available also in the manufacturing, healthcare space, etc. And that to me is a game changer as well. So these are areas where we've invested a lot in developing capability in that space, being able to embed sensors in different ways. Give you an idea, we've been in touch with a company in the UK, looking at even delivering low-cost sensors to manage chicken sheds, right? Just understand how can we measure certain, with certain biosensors, measure certain signals that will give you an idea of the well-being of the animals and how productive they are, and so on. So there's lots of tech that you can combine it together with what we've discussed earlier, and Anil mentioned in terms of integration technologies, cloud computing plus AI. I think will unlock huge areas of benefit. And then I guess the key balance there is then understanding what needs to happen at the edge. Where do I need more intelligence? And where do I have to go off to the cloud? And I'll give another example. Think about this embodied AI. Think about an incredibly intelligent lab robot, where it might perform certain activities with you, and you might talk to that particular robot to do certain activities for you. The scientist can actually focus on thinking about the next experiment, or thinking about what to interpret in those experiments. But you might think that that robot will be connected somewhere to the cloud and carrying out things around, determining solubility of crystals, and therefore exploring the next experiment. So huge areas for impact. Not so much for 5G in this case, obviously, because the lab is a compact space, and with Wi-Fi and other technology will be doing the same. But I think just if you extrapolate that concept to sectors like agri-tech, or throughout the supply chain, even in pharma, think about solutions that will connect the patient with the doctor and making sure that drives adherence and compliance to treatment. I see endless possibilities.
Perhaps
what's
Francis?
interesting, yeah, just to kind of expand on what you're saying, Alfredo, these applications require a lot of local data to be processed. In many cases, that the latency is critical, because maybe there's some real-time event, like your Starship robot or things like that. So what's interesting is you can learn from what happened in the data center. The data center in the early days, a data center were basically, there's what they call north-south traffic, which is the outside was talking to the inside, and you kind of go back and forth. Now it's actually mostly east-west traffic, which means you have these racks and racks of servers talking to each other, because they're basically looking at each other's data and analyzing each other and trying to get some conclusion from that. And then you send out some insight back to the user, right? So I think what's going to happen in the 5G case is that the network, the data center, the compute will shift towards the edge. So the edge compute becomes more capable, because you have to have this latency, local processing, don't send everything up away 50 milliseconds, 30 milliseconds away for latency. And what that does is, if there's more, the equivalent of east-west traffic, which is now local clusters, which have some correlation, will compute with each other. So that's going to drive new changes in the infrastructure. We're seeing that already. For example, optical is kind of have a mini resurgence, optical networking I'm talking about, fiber optical stuff, because you have to connect thousands and thousands of little micro antenna and RANs and base stations and so on. Hard to predict where that's going to go, but you can see that starting to happen, and this 5G is kind of leading that charge.
All right, and Anil, if you've got anything to add?
I don't have anything further to add, guys. I mean, this is really insightful comments. I don't want to sort of belabor the point. I think they've done a great job explaining the opportunities here.
All right. Well, I'm conscious that we are a bit over time, so thank you very much, guys, for joining me for this webinar. Really wonderful webinar, wonderful insights that all three of you brought together here. Thank you very much once again on behalf of the GCV and on my personal behalf. Thank you very much to the people who joined us live, and for the rest of us for the rest of the signups and the rest of the GCV audience that couldn't. This will be uploaded on our YouTube channel as soon as we can, and we will also share the slides. So once again, big thank you. Stay tuned for our next webinar, which is going to be in September on the telecom sector. And stay safe, and have a good day, afternoon, or evening, wherever you might be in the world. Thank you very much. Bye-bye.
Thank you very much.
Great
Bye.
meeting
Thank
you
you.
all. Take care. Bye-bye. Stay safe.